Investors, they've been enjoying a windfall as more states roll the dice on legalized gambling. Of course, they want gambling because that means tax revenue. The payoff has been especially big this year for those betting on slot machine makers. We're going to talk about that. But how long can all of this love affair with the gaming industry last? Well, let's find out. We've got an expert, Joel Simkins. He follows the group at Macquarie Securities. Joel, good to have you with us. Thanks for coming in. I know you just flew in from Chicago, so I appreciate the time. What's going on right now when you take a look at what's happening on the Las Vegas Strip? Still depressed?
Sure. Well, it's a tale of 2 years, right? People did not want to own these stocks last year. A lot of companies were going bankrupt, on the verge of bankruptcy. This year, it's been a huge turnaround. You've seen the Las Vegas stocks really, Las Vegas and Macau stocks really rally in the last couple of months. The
Las Vegas Sands, Wynn Resorts, right?
People are looking past 2009. They're looking past 2010. We're not really buying it. You know, we're not convinced right now that City Center in particular, which is MGM's $8-point-something billion project, is opening in December. We don't think that's going to grow the market. We think it's going to cannibalize the existing operators on the Strip, like Las Vegas Sands and Wynn. And really, the key driver here is the business convention piece, right? We don't think corporate America is going to travel for at least the next couple of years. So,
not if Washington, D.C. has anything to do about
definitely
it, right?
not.
I mean, you don't want anything in the headlines about going to Las Vegas to hold your annual meeting or convention.
Yes, what goes on in Vegas stays in Vegas, but not for the next couple of years.
So what does that mean? I mean, we talked about the City Center project, MGM Mirage. I mean, are they safe from bankruptcy for at least a little while?
They've bought themselves some time. You've seen a lot of high-yield debt financing activity. So these companies are truing up their balance sheets at a higher cost of capital. But we're really sticking to our guns here that you want to own the regional gaming stocks. There's very limited capacity growth for the next few years. And they're actually seeing, pretty good trends with this staycation phenomenon. They're all cutting costs. So we really think that's the place to be. When the consumer starts to feel better, they're not necessarily jumping on a plane and going back to Las Vegas.
They're getting in the car and maybe going to something a little bit closer to home. So things like what, Ameristar casinos?
Penn National is the one we've talked about frequently. Right. Great balance
And he still
sheet.
has not made, Peter Carlino, right?
Peter Carlino.
He has not made any acquisitions with all that cash that he got from that failed LBO.
Well, they're sitting on $800 million of cash. They have the lowest balance sheet leverage in the business, so they're going to be fine. They're going to find a good opportunity. They're just not going to overpay, and I think the bid-ask spread will come in. But interesting anecdote, I was out in Red Wing, Minnesota on Monday morning at 9:30 in an Indian casino. An hour and a half out of Minneapolis, absolutely packed.
Packed.
This is a private Native American casino. We were touring their slot floor to kind of get updated on the different various manufacturers. And talking to the general manager, he's telling me even his employees were not going to Vegas this year. They're staying close to home. And they had actually seen an uptick in visitation this year because of the staycation phenomenon. So these data points really get us positive on this continued theme.
All right, so the idea is stay regional. Don't look to Las Vegas for any uptick in the
Right.
gaming industry. What about Macau? We always want to know because we've also got to find out, aren't they going to kind of split off some of those operations? I mean, wouldn't they want to just they're going to raise money in Macau, right?
Yeah, that is the topic du jour right now. You've seen Las Vegas Sands, Wynn indicate that they want to file. They haven't really named which exchange yet, but they want to file over there and kind of monetize this fervor that we have right now in the Asian markets with the ramp and in valuations. I don't blame them. I'd certainly like to sell my assets at inflated multiples, but I don't see where they're going to invest that capital and generate a return. So we're still really bearish on Macau as well. They have the same capacity issues that Las Vegas does and declining return issues.
Because the issue is, okay, you go ahead and raise that money. You can't just keep it on the balance sheet. I mean, it looks good short term, but if you're an investor, you want them to do something with that money. It's not supposed to bail out the previous mistakes or the previous problems or indeed just the sluggish economy.
Correct.
All right. So if that's the case, stay away right now from Las Vegas Sands, stay away from Wynn Resorts?
We think these things have had a really good run. We have gotten a little bit more positive on Las Vegas Sands. We upgraded to neutral from an underperform, which is a sell rating. So we're more positive because they do have a couple of catalysts. Singapore opening up next year. Obviously, some of the debt refinancing activity and maybe a potential IPO. But we're still really not better buyers of these stocks right now.
All right, but you say watch those regionals, right? Any movement on any kind of states going to be letting gambling come to their
states?
That's
been fascinating. States that were unthinkable a few years ago. Ohio just legalized slots at tracks,
right.
Almost 20,000 a few weeks ago. Massachusetts, our legislator contacts are saying that's going to be a slam dunk this fall. There's 4 privately owned racetracks there, and the government's looking at all these tax dollars going to Connecticut and other states, and they want a piece of the action.
Racinos, all right, that's the new word. All right, we're going to continue the conversation. We've got more with Joel Simkins. We're going to talk about the companies that supply the gaming industry Should investors consider those? We'll find out. This is Taking Stock on Bloomberg. A programming note, Bloomberg's Taking Stock begins each weekday at 3 p.m. Eastern on Bloomberg 1130 AM, XM Channel 129, Sirius Channel 130, and on Bloomberg.com. And yes, as a podcast on Bloomberg.com and iTunes. This is Taking Stock on Bloomberg. I'm Pim Fox. My guest is Joel Simkins. We're going to talk about the companies that supply the gaming industry. You know, Joel, there's no real gaming industry. You don't show up. Someone's got to actually make the slot machines. Talk about the industry. What, WMS? Is that one of the leaders?
That's really our top pick right now. It's been actually a very tough couple of years for the industry, as we talked about with the distress in the sector and the bankruptcies, et cetera. You had a significant pullback in what we call replacement activity, refreshing your slot floors, et cetera. And what you're seeing right now, some of that demand, is coming back. The world didn't end. The business didn't go away. And WMS, this is what we call the Wizard of Slots. That's kind of a joke, but this is the most innovative company in the industry. They've went from a laggard in technology to having the best technology by a mile. I just came back from Chicago this morning. We were touring their R&D center in downtown Chicago. We got a sneak peek on some of the new products coming out over the next couple of years.
Because this is not just no longer for people that don't play this stuff. I mean, this is no longer just putting a slot machine, a machine pulling a bandit. These are games.
This is like playing your video games on your PlayStation 3 or Xbox. There's a lot of horsepower and bandwidth, and so they're an innovator. They have a debt-free balance sheet, and right now you've got the perfect storm. So we're starting to see a recovery in replacement demand. Secondly, you're seeing these new jurisdictions start to pop up, so that really gives you growth in the outer years. And thirdly, they have great products. So when we were talking about this casino we visited in Minnesota a couple days ago, they just rolled out a new product called the Reel 'em In, Compete to Win. It's a fishing game. It plays very well in that type of market. It's earning 5 times house average after 2 weeks. There was a line, 5 deep, 9:30 in the morning, people wanting to play this game. So they've got the products that the gamblers want to play and the casinos want to purchase or lease. And they've taken significant market share from a number of their competitors, primarily IGT, which we've talked about a number of times. They're kind of the big blue. They're the IBM of the business. They're going through their own turnaround right now. But WMS has tremendous momentum.
Also, the server-based gaming how's that working out?
Server-based, I think we're close to the tipping point. Maybe the view that some folks had in the past in terms of everybody's going to go through a massive upgrade cycle. That's not going to happen. We think we're going to see a steady rollout. Their first test case for that will be City Center this December. They're going to roll out the first truly server-based floor. It's going to roll out some of this functionality, but we think it's going to be a very gradual rollout. It's really a content-driven business. Think of this as a movie studio. Who's got the best content is ultimately going to win the race.
All right, and you're saying WMS now is the one that's got the winner.
Followed by Bally Technologies.
All right, what's your favorite game?
My favorite game, would probably be, Monopoly.
Monopoly.
Yeah.
All right. Fair enough. Appreciate it. Thank you very much. Joel Simkins coming in from Macquarie, giving us some insight and indeed some stock picks on WS Industries and the gaming industry.